What's happened since then is that the Treasury, that's the Fed, sorry, has been selling bonds to fill up their general account. This is taking money out of the system. Since July 16th, they've taken out about $500 billion, which has had some effect on risk assets. And crypto is the risky product that is most likely to lose value quickly. Crypto got the message that this is where the cash withdrawal stops. The general account of the Treasury is now fully stocked, and we don't need to take out any more cash. Today, Raoul Pal will use his many years of knowledge and experience to explain the very simple dynamics of what is happening right now with the Treasury Secretary and what that means for XRP, all other digital assets and stocks as well. You guys need to pay close attention because I can promise you that the next 3 months will change your lives in huge ways. And it starts today. It begins now. This is your last real chance. Yes, please click the like button so that everyone can see the movie. Now let's begin. Cash flow around the world is growing at a rate of 8% per year, which means that we're all-time highs. That's what we think of when we think of liquidity because we're crypto or tech buyers. We believe this is good for everyone, including your income. This is debasement of the currency, and it's making you lose all of your cash savings. This is what it's all about. If you can't beat this 11.1% growth rate of global cash plus 3% inflation, that's 8% growth. Yourself in the future is getting less money. We're in this game. This is why we're taking long, crazy, and careless risks in crypto and technology. Okay, so what does it matter? That's what Bitcoin is. That's what NASDAQ is. It's what makes markets go. There are also two different sizes here. Why? The growth of Bitcoin is built on Metcalfe's law, which is a model for how networks adopt new technologies. Over time, you get both the network not working as well as it should and it becoming less useful. This is why the speed is so bad. All the big coins like Bitcoin and Ethereum, this is why I use Bitcoin. It's simple. It has been used for the longest time to show people inside, but Solana and Sui, you do what you want. It's all about the same thing. Why it's important. There is a 90% link between them. That's 90% of the changes in the price of Bitcoin that can be explained by this one big factor. Liquidity. Also 95.96% of the NASDAQ. So what we have, and I keep trying to tell people this, I'll tell them more about tomorrow. A single macro variable can explain 90% of the changes in the prices of all major assets. Everything else is just noise, so this is the easiest chance to take a global risk ever. Everything moves around. Can you see the twists? This is a wiggle. It's just noise. Squirms. This is the trend, so it's all just noise. To understand the way, all you need to do is understand liquidity. It's also not right to worry about the next 3 weeks, the next day, or the next month. What's going on with global liquidity? There isn't a lot of money in the world right now compared to last year. It looks like we're not yet in the growth phase. We've seen more money flowing around the world. It's only recently started going down. What do you know? The stock market has gone down a little. Strangely, these were the banana zone phase 1 fix, and the beginning of phase 2. This is when we think it starts to do more of it. This is the growth phase. This won't happen because, well, there isn't an outbreak. We want liquidity to rise to about 10 to 15% a year. If you stay there for a while, that will start to really drive assets. Now let's look at the World M2 chart. Since July 16th, 2025, this is the 12-week lead. We saw this weird show that seemed broken. It's not working. You are stupid for following this. A lot of people forget about it. We don't forget. During that time, the Treasury general account, that's the Fed, sorry, has been buying bonds to fill up their general account. This actually takes cash out of the system. Since July 16th, they've taken out about $500 billion. That has had some effect on risky investments. Of all the risky investments, crypto is the one that can be sold the most quickly. So crypto got that, which has been all over the place. It went up. Alts have done better than expected. Then they went back down. And it's been a little messy, not much more than that. There has been nothing really bad going on, not quite right. The most expensive ETH, the best for Sol, they tried to get away, went back down. Okay, but most of the time it's because they're not careful and have lost a lot of cash very quickly. This is where the release of cash ends. At this point, we don't need to take out any more cash. And the Treasury general account is now full. That bad thing is probably gone now tomorrow, this week, next week, or whenever. It's gone, and we can see that funding will catch up. Does it match this chart? I'm not sure, but it has always done that. I'll talk about the past soon. Okay, the NASDAQ comes next. It's actually done really well lately after this beautifully, because this explains 97% of NASDAQ's success. But take a look at this. NASDAQ has been able to do this before. Everything here is based on flows. We can see that NASDAQ is getting steady flows because of this technology bid, and it's also getting money from foreign buyers, etc. It's also been messy with Bitcoin because it hasn't had as much cash as it could have. So it's the city at the edge. I'll show you that Bitcoin does better when the marginal capital comes back. As promised, here is the chart of Bitcoin versus NASDAQ since 2022. So Bitcoin has been doing better than NASDAQ. That's what it does. That's what it does. That's why we own it. It also sets up these nice remedial patterns, fixing the pattern up. We're now back to this old 2 standard deviation range. Favorite spot of ours where Bitcoin usually does better. Now, I've seen that a lot of you don't like crypto tech stocks and say things like, well, crypto is boring, things have changed, the market is now different. Now they're all different. It's not. It just takes place. Things happen for short amounts of time. And what will happen is that more and more people will sell their crypto. I even heard from a good hedge fund that they were thinking they were going to trade more stocks instead because the crypto market isn't the same. This is what they're going through, and this is what will happen. It's pretty clear, and I use the word Bloomberg to make that point. When I used a fake Tom DeMark, I got in trouble, but I still use this, and I've paid for DeMar for 25 years or so. In any case, we got the 9,139 pattern. It looks like Bitcoin will do better than technology at this point. Technology might get a little better. It does okay at first, but then it starts doing better. Also, I think that should beat. Here's another interesting picture that has nothing to do with the flow of liquidity, but does show when people become obsessed with a certain type of market. It's amazing how similar S&P was from the 1990s to 2001 and how similar it is now. And that's the story of this technology, this AI story, and how it's taken hold there. So that's just an interesting picture. I don't think it will last forever, though. It seems like this goes up and then down. This cycle seems to last a little longer. That's where you heard it first. Raoul Pal says that this market will last a little longer than many people thought. The M2 doesn't lie, so I tend to agree. When the Fed lowers interest rates or prints money, the cycle will last longer because there will be more money in the markets until something comes out that takes that money away. It looks like the prices of assets will keep going up. It's really that easy. You saw that there was a 95% match. Yes, you did see the 90% match there too.